Hey, Freedom Frugalers, it's time for another wonderful episode of Frugal Freedom. I'm your virtual mentor, Izzy, here to teach you all that I know about finance, productivity, and overall well-being. Today, I want to tell you guys about 3 things that are assassinating your income and destroying the possibility of you creating future wealth. We're going to talk about the 3 silent income killers. So at any point, if this video interests you, be sure to hit the like button, subscribe, and hit the bell notification. That way you get access to all my new videos every Wednesday and Friday. Number 1 is debt. Imagine making money and then that money grows at 15 to 26%, even up to a 36% rate every single year. And I know you're looking at me now going, Izzy, how is it possible that I can make up to 36% in interest every year? That's not possible. Well, it is, my friend. It's just not happening in your favor. Credit card facilities and loan officers are doing this to you. And if you don't have a handle on your debt and you don't manage it right, you'll be spending money that you don't have, but have to pay these high interest fees, which is more money that you don't have. It is very expensive to be broke, my friend. And this is the reason why I got rid of my revolving debt as fast as I could. I still use my credit cards, but only when I have a surefire plan to pay it back. So that's pretty much on small subscriptions. Number 2 is taxes. Now, to clarify, taxes are a good thing in theory. The people that live in the country give a small portion of their money to the government, and in return, we get better and updated infrastructure such as schools, roads, highways, and the list goes on. But without proper knowledge, every part of the word tax can be detrimental to your finances. I'm talking income tax, sales tax, property tax, state tax, whatever it is. If you don't have a proper knowledge and it's tax, it can and possibly will hurt you. Many people put on their W-4s a 0 or a 1. Many people put a 0 or a 1 on their W-4 when they get a new job because this is the safest and most secure and surefire way that the government is not going to come to you saying, hey, you owe me this. But by putting a 0 or a 1 on your W-4, you're essentially telling the government to take as much money as they like and at the end, give you back only 50% of your money. And I get it. You don't want to file your taxes and end up having to owe. But it costs you more than you think. With the amount of money that you loan the government, all without them paying you interest, by the way, you could have been taking that money and putting it into an interest-bearing asset. And let's not mention the cost of the money that could have been used to just survive. Number 3, inflation. For those of you that don't know, inflation is basically when the price of things increase while the purchasing power, aka the value of your money, decreases. For example, let's say a loaf of bread goes from $1 to $1.15. You might think to yourself, oh, well, that's just 15 cents. But then next year it's sitting at $1.30. And then eventually it gets to $2 a loaf for standard bread. How would you feel? Still wouldn't care, huh? Well, let's say this then. Put it back down to $1. If you only make $5 an hour, you don't, but go with me. Meanwhile, if that price of bread goes up to $2 and you're still making $5, it will literally take you 30 minutes of work to buy you a loaf of bread. And not to mention, if you only worked for 1 hour, it costs you almost half of your paycheck to get a loaf of bread. By now, you start questioning if you really need this bread or not. And that's what inflation is doing. And it's not just bread. It's everything around you going up in price. Your rent, your gas, your food, your clothes. And don't get me wrong, I get it. But guess what's not possibly rising? Your income. Yes, things are steady rising while your income stays flat. And as a matter of fact, the things that you could buy with, say, $100 this year might not get you those same things even next year, if not within the next 5 years. It is for this reason why I'm against even high yield savings accounts. I would suggest having a cushion of about 3 to 6 months savings. But after that, I want you to start putting your money into some assets that will bear you at least 3 to 4% of interest. That will start putting you over inflation. The bottom line is that if you feel like you're struggling to keep money in your pocket at the end of every month, even though you feel like you're very cautious about where your money is going, these could be the 3 things stopping you from achieving your financial success. I call them silent income killers because they creep up on us from behind and they slowly assassinate any of our money workers that could be making us more money. Get rid of debt as fast as you can. Study taxes so that you don't pay out more than you owe. And consistently grow your income so that you don't always feel like you're playing catch up. And if you don't know where your money is going at all, I feel super bad for you. But don't worry, I got a free and easy solution for you. It's 10 videos on the different methods of tracking and spending your money with little to no discipline. It's actually called No Discipline Budgeting. And to check it out, view the link in the description below or check out the info card at the top right about now. But that's all I have for this video, guys. Be sure to like, subscribe, and comment down below if you agree with me on these 3 silent income killers. Also, if you have any other topics that you would like me to cover, I'm happy to see those below as well. Once again, I've been your virtual mentor, Izzy. And until next time, stay frugal until you're free. Peace.